Okay, here we are guys, back on the US dollar yen daily chart. Again, same chart, same thing, RSI on the bottom. Okay, so some ideas of how to use RSI, little real world examples as opposed to theory, because the theory is all great and we know you see the indicators have got all this theory and stuff and it all sounds very nice on paper. You know, when you're in the heat of the moment or in the battle and you're you're underwater or you're putting risk on the table, things aren't quite so clear. So let's have a bit more structure to how to use RSI. Now the one thing that I really like using it for, now bearing in mind that traditionally the idea is that in a range bound environment you're selling overbought, you're buying oversold. I'm not a huge fan of using that myself. I know people who use it very successfully. Again, trading is a very personal thing. You've got to find your own path, your own way. One thing I like to use it for is in a trending environment. Now you're going to say, listen, that sounds ridiculous. In a trending environment, you're going to get your head handed to you. Yes, I agree. Don't mistake this. If you're in an uptrend, selling an overbought RSI is suicide because the trend can go on for pretty much for years. And if you're selling overbought, the thing might not go oversold for ages. And you're selling overbought, the price could keep going and going and going, and it's very difficult to get involved. By all means, use it as a filter. If you believe the trend is ending, by all means, use it as a sort of condition to look at other things, but just purely selling it when it's overbought or purely buying it when it's oversold, as I say, is a dangerous game. Now, what I like to do with RSI is I like to see, in fact, any oscillator, stochastics, this kind of thing, if we're in a trending environment, the RSI is obviously going to be continually overbought for a while in a proper trend. And there's a great example here on the US dollar yen. You know, that good explosion out, and if you recall, if you've been trading the yen, it was that kind of long. If I get my drawing pen out of the way, it was that long downtrend we had. It was really struggling. It wasn't. It kept banging banging itself against this 100 floor. You know, we had this kind of, have to forgive my trend line here, but we broke out. Then we got this real explosion to the upside. Now let's look at this. Now this obviously made the RSI go positive, very strong, very overbought, over 75 condition. However, what I like to look for now is looking to buy the first oversold condition after an uptrend. So if you've got an uptrend, you're then looking to buy the first oversold condition on a pullback in the uptrend. Okay, so we see the uptrend, we see continual overbought, and now we're looking to buy the first oversold. Now, the first oversold in this yen is, we almost got oversold here, but it's here. So your first buy after you've seen this good strong move, you've got to have the good strong move, you've got to have a good continued strong overbought RSI, is going to be around in this environment here. Now I know, listen, we're hindsight here, we're looking at this, it looks great. We'll show some other examples as well. Again, always frame this with your own risk parameters, always have some sort of risk management in place, but it's a good kind of guide to get you involved, because you think about the theory of that trade, is that you've got momentum. RSI has indicated positive, strong momentum to the upside. Now you're waiting for the first kind of unwinding of that momentum to get involved with a continuation of the momentum. Now this was a little bit of a long time, really. It's possible that if you were looking to take this, you might have said, listen, this has been a long time. I would have rather it gone oversold quite early on here. To be honest, that would have been the perfect scenario. Oversold after a good drive, not much time to do it. But anyway, that's the theory of it. Let's scroll along. Again, we're not going to cherry pick too much because I really don't like doing that, because as you and I both know, in the heat of the game, it isn't like that. So, but what I will look at is, let's have a look at something that I know is uptrending and then see how the RSI has performed with that. So, Facebook, good stocks, a couple of stocks, and then we can look at Amazon, Facebook, Google, all those kind of stocks. Where are we? So, yeah, look at this. Massive uptrend on a daily, and you can just see, again, being very broad with it, but just highlighting the point, is after you have good strong momentum to the upside, continued overbought, okay, not continue as in hugging it, but several overbought readings, first oversold became a nice place to position yourself long or to close a short if you're positioned short. Same as we moved along here, we kind of almost got oversold here, and it was the sort of low swing point, again oversold here, it was the low swing point, oversold here, and it was kind of the low swing area. So rather than selling it overbought because you're kind of going against the grain, if you identify the momentum and then look to do that first counter trend move. There's another couple of examples quickly before we move on to some other ways of using the RSI. Amazon, again, another kind of example of, listen, the trend is clear. There's a clarity to the trend, to the momentum. It's obvious there's a lot of a lot of demand coming in. Demand is outstripping supply for the majority. If we kind of smooth this out with a moving average, you'd see that. And obviously, we can see that from my ball. But every time you're getting the first oversold condition, it's a little bit tricky. Obviously, you're not going to get them all right, and it came to the second leg lower there. But you can see how it does guide you and kind of see where the end of that counter trend momentum is running out. So you get the momentum in the strong direction, continued, a counter trend move, momentum, yes, counter trend, and then when that runs out of puff, then you're getting those oversold conditions. So that's one way of looking at it. Let's have a look in a second about a third way of looking at it.